Good morning, everybody. Quite a day today.
Morning.
We're going to look at the Polish zloty India rupee cross all through the show today. I think that's the most important currency to focus on. Morning, guys.
Morning. Are we having fun yet?
Yeah. Hope everyone's got clean underwear on. Right. All jokes aside, obviously, all the fun is in dollar yen. You can forget me and my notes today. Been stuck in the trading screen, stuck on the news screens. Going to keep my squawk open during the show, eye on the headlines because there's lots going on. We've got another press briefing from Kanda and Suzuki round about now, so going to keep an eye out for any other comments coming from there regarding intervention. In case you've just woken up, yep, the Bank of Japan have finally pulled the trigger on intervention. So where do we begin with all this? Well, it's really going to be about what happens from here. Obviously, we've seen a big move in dollar yen, nigh on 500 plus pips. The risk is you're going to have two camps now. You're going to have those who want to pick up a dip because they think intervention isn't going to last and the pressure will go back on the Ministry of Finance. And you've got those who are going to hit the rallies because they want to front run the market or front run possible intervention. Now, what we need to know, or what we would like to know, whether we find out or not, I don't know, is how they intervened. Have they just gone in big lumps, or have they just hit it and then sitting on the offer? Are they going to hit every rally? What are they going to do? Also, what is the follow through from all this? Are we going to see the US and particularly Yellen and her team at the Treasury coming out with comments, either giving it the green light by backing it or saying it's okay, or by saying that they're going into the manipulation stages, i.e. the US's naughty step for currency manipulators. We also need to know, are we going to get coordination? Are we going to get other central banks now dipping in? Have the SNB been smoothing Euro Swiss? We had the rate meeting this morning where they went in as expected, the 75 pip hike. Not a lot of move over that meeting, but then wallop afterwards. We've seen this big move up as well. So there can be knock-on effects from this intervention. The Taiwanese central banks come out saying that they can possibly intervene if there's overly excessive fluctuations in the market. We know South Korea are interveners in the market. We know the Hong Kong Monetary Authority intervene in the market. Others intervene in the market. This can lead to a lot of knock-on effects. So what we need to watch for is a couple of things, as I say. Is Japan out on their own as far as one of the biggest central banks out there? Are they going to be isolated? Or is there going to be coordination, potentially green lights from other jurisdictions to say it's okay what they're doing? Remember, it may have been Japan who have been most vocal about their currency, but this dollar strength is happening against everyone. You have to look at cable, the euro, and the likes, and the impacts from those are being spoken about. We've heard it from the ECB. They're watching FX carefully as well. The rate is important. It's going to define how trading happens from here on in. If the Bank of Japan is isolated, then we can keep it to trading the yen and maybe playing either side of the interventions, finding out where the support levels are coming in, finding out where the battle lines have been drawn by the Bank of Japan. If it's coordinated, that makes it something different because it means it's potentially going to get much more messy. So lots to look at, lots to talk about. Let's bring in the other guys. Kay, what's your thoughts, mate?
Yeah, good morning, everybody. So far, it looks to me that they are on their own. Actually, Suzuki's press conference is starting right now, and dollar yen picks up. Yeah, so far it appears to me that they were on their own. Okay, the Swiss it's a different story. Euro Swiss was trading under 95 at the time. If they would have done any coordinated interventions, we should have had something from the ECB, in my opinion, as well, which we haven't got yet. So it's all an open question. I think they went in the market and just hit the bids. Wanted to put it down a good few hundred points and then see what happens. What they are going to do next is an open question. They can go and sit on the offer around, I don't know, 143, 4, 5, who will know. But to me, it seems that they're on their own right now, and no one else has been participating in it. Interesting, we'll see what happens this afternoon. If they did only ask, for instance, whether they only asked help from the Fed, which could be the case as well, and in which case we have to be very careful for other currency pairs, because they will scare the rest of the dollar longs as well. But yeah, so far I keep it to sole intervention, seemingly 3 kind of rounds. There we go. Oh, he won't comment. So Suzuki will not comment on whether the intervention was solo. So I guess they were solo. Yeah, but we'll have to see what they do now. So far, it's clear they hit the market. They were not just sitting on the offer. Because to put it like 500 points lower, you don't do it by just go and sit on the offer, right? So he won't tell us the size of the interventions, which is logic. By the way, size of interventions can be kind of determined on the next Bank of Japan accounts, but it's a bit like the Swiss National Bank producing their weekly domestic deposits, but Bank of Japan is only doing it once a month, so we'll have to wait for a while. Yeah, but I keep it to solo interventions in my personal view right now. Yeah, the rest of the dollar pairs had a bit of a scare because they came in, but let's see how the rest develops now.
Yeah, and I guess we should all talk about has this been brought about by the Fed FOMC yesterday? Has that been the trigger? What they did yesterday pretty much went as expected. Height 75 as expected, and the dot plots went up. Those of you who've been watching the show for the last few weeks would know that that's what I've been banging on about. Seeing those go higher, we saw the mark. Some players in the market via options and other parts of the market taking their expectations up for Fed rates and how high they may go to. The Fed actually built an extension on their dot plot. The top level on the July dot plot was 5% on their chart. They had to add it on up to 6% to take into account the higher dots that have come into play there. So we've had a big shift up as expected. That's what's got the market going. The Fed, in their message, has said we are carrying on, that we're not slowing. They say they may obviously slow the pace of hikes at some point. The dot plot showed potentially another 75 pip hike to come at the next meeting. And the range amongst the Fed members is for perhaps another 100 basis points or 125 basis points before year end. So naturally they are going to slow at some point, but that came with the message that they're going to keep going until the job is done. Powell spoke a lot about the soft landing, about the chances of the soft landing are diminishing, and that policy may have to be a bit more restrictive, but they're still going to keep going. It's combat inflation or nothing as far as they're concerned, which is a bit of a dangerous speak because it seems like they're going to the extreme on the other side, whereas before they didn't believe inflation was coming, didn't believe inflation was going to be a problem. Now they're going the opposite way, and they're potentially going to do the economy some damage just to combat inflation. So it's the pendulum swinging from one extreme to another, but that set the market, that set the dollar in motion. Euro dollar got under 99, is holding under 99. That looks very significant for me at the moment. I was short from up above going into the Putin risk the other day. This break and under 99 is, for me, is really significant. The fact that we're holding under there sets that we could see some further downside. Now we are seeing a little bit of a range develop, 98, 98.10 up to 99, 99.10, so 100 pip range there. Despite what's going on in the yen, this is looking fairly sedate. Cables all over the shop, as you can imagine. What did you grab from the Fed, you guys?
Well, we said before that the most likely scenario was 75, and really no change in the whole rhetoric. And for us to get to start to change in terms of our macro view, or at least my macro view on risk assets, on everything, we need to get something significantly different from the Fed. And yes, it did talk about reducing the pace eventually of rate hikes. I mean, that goes without saying, I think. So I think the market kind of overreacted initially, but as you said, nothing's really changed, and market's pricing more for next year. I think the terminal rate is now something like 460 or something like that. So really, has something changed dramatically? No, I don't think so. And that's why I think the markets then yesterday decided that actually, no, we shouldn't be up on the day, and everything just tanked. So I don't see anything new. I don't know what Cayman thinks, but I haven't seen anything new from them. Not yesterday anyway.
No. Okay.
Yeah, zero zip new to me, although the tone of his voice was maybe slightly less bellicose than it was at Jackson Hole, talking about the housing market, talking about a bit of the consumer, but for the rest, no, they follow their playbook, and for now, yes, 75 is what we are expected. It's what they have been giving us, and it will be dependent on what's happening now with the data. But he wasn't against anything for the future. So I think the dollar, I mean, it reacted as it should have. Perhaps some people were disappointed about not getting 100 basis points. Then we saw this reaction on. He said one line right at the beginning of his speech. Was it about the housing or the consumer? And that sent the dollar lower for a bit. But then afterwards, business as usual. Dollars is what we need, like the song says.
Yeah, dollar, dollar, holla, holla, or whatever the song goes. Okay, so let's talk about it then. Dollar yen. You know, we've been watching these levels for ages. You know, the 145, 141, 50. Both of those have been taken out. So for me, it becomes a bit of a case of price discovery now. Where are the levels going to set up? You know, when we had this first move to 145, we were talking about where are the levels going to appear. Are we going to get solid resistance at 145? Where's the support coming in? And we got that. Sometimes you just have to sit and let the price action do its thing. Let the market tell you where it wants to go, what it wants to do. Don't know what those dots are about. There we go. And then the range is developed. So, you know, 140, 150 been blown out. And it's important to know that when you're getting this sort of stuff, intervention, big market moves. I mean, these guys per se, they're not watching the charts. They're not saying sell it down to the 51, the 50 fib of XYZ. They're just going into the market and saying, start selling. We'll tell you when to stop. For us, the tech be damned, but it's always going to stop somewhere. You know, I've had this line in 140.65 just from the prior highs. We had a break point there. That's where it's pulled up. It's anyone's guess. You know, we were looking at 140.150. Went straight through like a hot knife through butter. Will it appear second time around? That'll be the question to ask when you're looking at this. And what for the upside? Where are we going to start seeing the resistance coming in? Is it going to be up towards 143.50? Is it going to be back up towards 145? So from here, if you're trading dollar yen, be careful of the volatility. You know, one single comment and you've moved 200 pips. If you're trading it, keep it fairly tight, but also be aware of that volatility. You know, if you're going in with 10, 15 pip stops, you're probably going to get washed out here or there. Just let the market come to you. Let the prices develop, see what the levels are from there, and then make a decision. But we're going to need to see a bit of water under the bridge here. We're going to need to see what happens in the US session when the Yanks come in. We're going to see if we're going to get comments from other jurisdictions, other countries. For me, I haven't done anything in dollar yen. I'm a spectator for the moment until such time as I can either pounce on something or get a clearer direction of what people are doing. Kay, how do you see it for me on the tech front?
Yeah, I had this line at 141.5 and we went below, but yours seems to be pretty cool at 140.65 as well. We don't know. Is it their intention to put it sub 140 to hurt some more medium-term accounts? I think for now, what they've achieved is probably scare the short-termers, but I'm taking a risk in saying that here. But I don't think that they will have scared any of the more medium to long-termers. I think those people were ready for it, and as long as it holds this 140 or so line, even 139. Looking at the size of the move that we had since last year, those people could be just holding on. And yeah, there's a few now intermediate levels. You got well, 142.80.85 was one where we are on right now. Then you got a bit in this 143.5 ish, then 144.40, and then we are talking again about 145. Yeah, I'd say we are going to be probably ranging some more, especially the day of the intervention itself. I'd be surprised if we see 145 again today. But yeah, never say never with the yen market. So yeah, I think we are going to trade ranges for a while, see what they have in store next. Yeah, and anywhere up to 145. If you get up to 145 again, I'd say that for the day we'll see them again.
Yeah.
So I would be surprised if we can manage to take it above 145 today. But for the rest, yeah, we're in a 350, 400 pips range.
Yeah, I think this is often a lot about the psychology. You know, the Bank of Japan, they don't really care per se about the level, whether they take it down to 140, 135, wherever. It's the impact. It's the psychologist saying, right, we're now in the market. And the funny thing with the intervention is the more you do, the less impact it has. Is that going to be something that's on their mind? Are they, you know, they're not going to get into it to intervene in every single day or anything like that, are they? They're just going to step back, let the market do its thing, and then give them a big reminder, perhaps, that we're still here. Yeah,
and unless because the interesting thing about I was just reading the Suzuki lines when you were talking. The interesting thing is that he said well, as they usually do in Japan, they already spoke about their explanation to the G20, because there are G20 rules as well to be respected. The explanation already to the G20 about if they would need to do, why they would need to do it, and it seems that they have done this right now. He declines to talk about other countries being involved, so I think we have to be a bit careful this afternoon. But then, yeah, Canada just saying ready to respond to FX moves under any circumstances. So they do seem to mean business, to at least try to stop the advance of the dollar yen.
He's also said he's prepared to take action any day, anywhere, including holidays.
Whether they are going to sit on the offer or just continue to hit the market is an open question. I think if we get up there again, I think they may be in for another round and hit it again today at least. And then perhaps tomorrow, because tomorrow is Friday, to end the week, to remind the markets not to do anything stupid. So I think these 2 days they might come in and hit it. If the dollar continues to advance versus everything, perhaps later on they may go and sit rather on the offer. So because there's a few different scenarios possible here, and it's a bit of a wild guess to know exactly now what they are going to do as the next move. But I would say if it goes up again to close to 145, my impression is that they will come and hit the markets again.
And what about the other side? Are the Bank of Japan a central bank that if they hit it on the top, they'll get out some of that position if the rate goes down far enough? Would they have been buying it back up in that 140 area?
No, I don't think so. It hasn't happened on the other side. Out of experience, when they were buying dollar yen, they were not really selling them until now. But in the last time they intervened in dollar yen selling was during the Asian crisis, and they had to go both ways in the space of a couple of months. And I don't remember, it was June or July that they intervened to sell dollar yen, because in those days we had Mr. Yen Sakakibara at as a head of the MOF, and he was very vocal about 125 to 145 dollar yen range. And then when there was a lot of pressure on the Asian currencies, dollar yen shot up as well, and they intervened above 100 and somewhere from 147. They succeeded to put it lower. Then we hovered around in a bit of a range, and then LTCM blew up, and dollar yen went down like 22 big figures in 2 days' time, and then they had to intervene on the other side. I don't see too many similarities for it right now, but I would not suspect they're sitting on 1.2 trillion dollars equivalent foreign assets, right? Foreign reserves. I don't see them starting to buy back if it goes down. They are not S&B. If we think about S&B, they are not.
Yeah. Yeah, understood. And it should be recognised, because we've seen, I've seen a couple of comments, and we had a couple of comments in our room about potentially how much ammo the Bank of Japan have got. They have plenty. Be in no doubt they've got plenty, even though they're on the opposite side of intervention in terms of they're buying their own currency rather than selling, where they can just print as much as they want. They're on the wrong side of it, if you like, but they have got 1.38, 1.36 trillion reserves or something.
Who?
The Bank of Japan.
Yeah, about 1.2, I think, latest.
1.2. Well, probably a bit less now, but yeah, they have got plenty of ammo with which to fight this. So don't be in any doubt that they're not got the bullets for this one. So let's skate around a bit. I know one of you guys in the room, if I can get your name right, Milos. Forgive me if I get it wrong. I'll call you Milos.
It's Milos.
I don't know. Milos.
Must be Hungarian. I don't know. Maybe.
We'll have a guess. Let us know, Milos, and make sure you pronounce your name right. Wants to have a look at Guppy. Sorry, Kay.
Yeah. If you say my loss, then it's just yours. Yeah, it's your loss, and
my loss, not yours. Yeah. Obviously, we have got the Bank of Japan. Forget the text there. I've not been on the Guppy chart for quite some time, so let's give it to that for starters. We have obviously got the BOE coming up in just over an hour. A 50 basis point hike is expected there. Rates up to 2.25% from 1.75%. Some risk perhaps there that they join the bandwagon and go 75, which may give a temporary lift to the pound. But as far as Guppy goes, Kay, you got any charting you want to show quickly on Guppy? I think the yen side is going to be the main driver behind this one in terms of the pound effect.
I haven't really updated my sterling yen chart either, but and also because of interventions, one has to be careful with charting anything right now.
Yeah.
But let me okay, I'll grab the screen if you want.
Yeah, go on, grab it for that one. Where am I? There we go. And we'll just talk about that one and then move into some of the other pound pairs.
Yeah, I'll update it as we go. I'll do a quick update of it.
Doesn't get much lighter than that, folks.
Where is it? Where is this one? Here it is. Okay, so what we had over the past days, we had these, okay, talk about fibs and levels. There's something here. Keep an eye on perhaps on this one. So, oops, what we can see for here, any rebound here, the serious rebound should find a bit of resistance in the 162 zone. The rest is yeah, 160. The figure is a bit of a level. We went below, but then bounced straight away off it. Yeah, 162, 160 over the Bank of Japan, and we are right back on this 162 level. So keep an eye on that one. I'd say for when we get the Bank of England, but it's a difficult call when you have one central bank intervening and then the other one having their own meeting. Those currencies are a really difficult call, but we can see it's a bit of a pivot zone here, the 162.10. If we start to jump back higher, 163.5, and on the other side, yeah, clearly 160.5 and then 160. And that's what I would say about the yen, really, sterling yen, really. Do you want me to run around the place for a bit?
Yeah, go ahead, mate. And just while you're doing that, Canda's out again. He's saying the size of FX intervention would normally be announced at month end. So September the 30th, this one, that's when we potentially find out how much they got in with or what they've done between now and then. So just keep an ear out for that month end.
Right. Okay. We all know about this 99 level on the euro dollar. We've broken below, and the two tests that we had so far of it again are capped. And I want to take the opportunity that we are here to talk a little bit about those interventions. Couple of weeks ago, I don't recall exactly when we were starting to talk about the possibility of MOF interventions in Japan. I was talking about what could happen in the other currencies. And I did outline a couple of scenarios, and one of the scenarios were that when the Bank of Japan goes on its own, we can have a dollar scare in the rest of the currencies. But what usually happens afterwards is exactly the scenario that we are seeing now. So we had this dollar scare in the euro dollar, in the cable, cable might be for the Bank of England reason as well, but in the euro dollar, in the dollar Swiss, in things like Aussie and Kiwi. And then we see once the dollar scare is over, and once the market got to grips with what is happening really in the market, then that scare is usually waning, and that's exactly what we are seeing now. We saw the sharp move up in the cable, we saw a sharp move up in the euro dollar, and then we're starting to hold levels again. And 99 on the euro dollar went just briefly above, and we are already nearly back to 98.5. Cable, we are back up 113 as well. So that's just a little bit about what can happen when we see those interventions. So yeah, on the euro dollar, a quick one. We are starting to hold now these levels here. Add a quick horizontal one. This is now our first intermediate and shallow resistance. But if we start to get back above 99.40, I would say, and especially 99.80, then I think this move may be really in danger. For the next session or two, we cannot forget this Bank of Japan intervention and the risk that we have, that we hear other central bankers from elsewhere, whether it be I don't know if anyone from the ECB is talking, but yesterday Dick Windows said something about the FX being an important part of the inflation play. So we might start to hear a little bit more about that. But if nothing else, if everything else equal, I still think this thing is looking weak for a move down to 97.5 right now. I'm going to let Ryan talk about the sterling into the Bank of England, but we're going to look at a couple of other things here, and the one thing is the dollar CNH. I've been talking about those resistance level. This morning we tried the 710. We briefly went above, and then with the thanks to the Bank of Japan interventions, we went back down to 706, but we're already back at 708. This thing still seems to be wanting to go higher. PBOC fixed 697 and a bit. It's about 200 pips lower than where the estimates were, but we are slowly moving up to those to that 7 mark for the PBOC fixings. They might be reluctant at first to take it above there, and CNH is now about 1,000 points above their fixing, which is maybe a bit rich. So I wouldn't exclude this 710 to come in as a bit of a resistance, and have a look back at lower 7s on the dollar China. Also, depending on what the Bank of Japan is going to do further, they might like what Bank of Japan is doing to jawbone a little bit about dollar China not being a one-way direction play either. So keep an eye on that 710 around, and on the lower end, 703 is going to be 700, and then to me the measure point for now is 697. If that starts to fail again, okay, then we have the 690s, but we could revisit 690s if it ever would come down quickly. My other one, we are on the next level. This is those April 2017 lows. We've also had a visit here around in the low 1960s. Euro is still having a lot of weight around its neck, and Mexico is still enjoying the far from my bed safe haven, how I call it. So I think this cross, apart from corrective rallies, still looks pretty heavy to me. What else? The metals. We
don't talk to me about gold.
Sorry?
Don't talk to me about gold. That thing's doing my nutting.
It's a bit of a dangerous one, right? So we had this 1680, 1675 zone. It broken. It was a big level. Everybody was talking about it. We find it back like here as well. This 7780. We've rallied above it yesterday, but then I don't know whether we can really talk about a revival yet. But I do have this interesting little trend line coming from actually the highs. And that's one that I'm monitoring as well, where we stopped bang on it around 1655 the first time. And that's one that I'm going to monitor closely. Of course, then the rest is all about 8085, I guess. Let me drag Stelios into the conversation while we're looking at gold, and then afterwards silver. Stella, are you there? Or has he left?
I think he's gone. I can't see him in the room.
Oh, okay. All right then. Well, sorry?
You're on your own.
Yeah, okay, no problem. But everybody's looking at the 1680 now. Yeah, it's going to be the pivot level, but I think it's going to be important for closes. You know, I mean, close above or below will keep the bias. We'll set the bias and the tone one way or the other. The interesting thing is yesterday we banged our head on this on this prior low here around 1688.89. So I'd keep that one in mind as well. And then silver, depending on the views, we I think it's holding up pretty well, and there is, to me, a fundamental reason behind it, and it's not a good one. But in times of war, people need to produce stuff, and since silver is a manufacturing product and used in a lot of semiconductors, and unfortunately likely needed to make drones function and all stuff like that. I think there's somewhere an unfortunate fundamental reason why silver is holding up better than gold, relatively speaking, I say. So, but yesterday we tried to break it, but we kept around this the 1680 trend line. I think is going to be important again today. 75.80. This one now, where I was looking at before, it's been crossed a little bit too often for my liking, so I'm taking that away. On the other side, I'm still looking at a 2025 zone, 19-20-25. A quick look on the oils. To me, we're in a bit of a downsloping wedge right now on the WTI, with a few intermediate levels around 88 and the prior low 81 and 81.5. Have a bit of a middle area there around 85, 86, which is which the market likes to have a look at as well. But basically, for as long as we're capped now below, call it 90, this may be having a bit further to go, and why not have a look at 80 bucks, 79 bucks at one stage. Brent is in the same situation. We did go and test those trend lines, which coming from well, it's a difficult one to put on, of course, but we do have a couple of other points here now. I think this 88, 87, and then 86 3/4 somewhere is going to be important. We can see the similar kind of pattern or a bit of a channel forming here. If we bounce off it, we could have a look back around the 97 area, where and then we have a 99 above. But for the time being, I'm a little bit reluctant to catch a knife. For one, because of the dollar strength, and for two, because of OPEC not being very clear on how the demand is going. And of course, we are going into winter. The demand can shoot up again. This one can start to rally again, but we'll see how that develops. For the time being, I'm a little bit reluctant to catch a knife there. That's about it, and I think it's time for you to have a close look, perhaps, at the sterling into the Bank of England.
Yeah, definitely, mate. No problem.
All right, over to you.
Yeah, okay, I'll take it back. Just a quick one I wanted to mention on that $1. I am looking at this top area. If we get up there, that 16-19 area, a big, massive double top there. It actually goes way back to that point there where we saw a bit of action around 2007, 2008. So a big long-term level. These are the ones I like. They can be big, they can be juicy. They can give you good money if you're trading it, but also be wary if we get a break above there. It could mean another leg up. But that's what I'm going to be looking at in $1 anyway. Okay, over to the quid. I'm gonna forget about cable for the moment, because rallies keep getting hit. It's a one-way street for this one at the moment. It's all to do with the dollar. Whatever happens in the pound is probably going to have limited effect if we see any uplift in cable, unless it's matched with other dollar pairs going the same way, i.e. it's mainly a dollar move. Then I'm going to forget about it. If you see a rally here and it's all alone, i.e. euro dollar's not following, Aussie dollar's not following, CAD's not following, etc., etc., then potentially that might be a rally that is worth getting hit or hitting for a fade. Let's come in a little bit. But as you can see, it's struggling up at this 13.50-60 area, bit similar to euro dollar in the 99s, very similar price action picture, but we keep heading lower. It's just a one-way street. What you might have better value in is looking at euro sterling, which is relatively sedate compared to everything else that's going on. I was speaking about maybe getting the dip down to its 87s. I've not been doing it whilst I've had focus elsewhere. I'll see what happens over the Bank of England as to whether I want to do that. It will be a fairly small, fairly tight trade if I do look for a long there. As I said, the surprise is possibly that they may go 75, getting on the same bandwagon as everyone else. The vote is expected to be 9-0 for a hike. This is one thing that you have to pay attention to when looking at the Bank of England decisions. The vote numbers matter. They're very important because it shows who the dissenters are, how strong policy action is seen by the MPC there. If they all vote for a hike, then that's strong. If two people don't vote for a hike, maybe they vote for neutral, unchanged, or even a cut, that's less hawkish than the actual hike itself. So keep an eye on those vote numbers there. I would expect perhaps it goes 9-0 again, but keep an eye out for maybe someone voting for, or we'll see in the minutes, someone voting for perhaps a bigger hike or those looking for bigger hikes to come. So for euro sterling, yeah, a bit of two-way action possible here. Still sitting in this range around 87 to up to the high 87s. If we get a concerted move back under 87 and we find it holding, we're likely to go back in this box and a move down to the low 86s. Long and short, I don't see anything potentially definitive coming from here that will kick this pair into any significant new areas or change the trends or indeed enact some trends. So if you're looking at the quid here, look probably to trade between the edges, trade the ranges, and see what comes from it. We've also got the CBRT, which is obviously another one to look at. Turkish Central Bank. Their rate decision is at the same time expected to keep rates unchanged at 13%. Erdonomics, he likes to fight inflation a different way to everybody else. That's the way he wants to do it. For the Turkish lira, we can't really trade it, so no real point in looking at it there, but we'll keep it on the screens because it can obviously be a bit of fun. As you can see there, continuing to go higher. For the rest of the day, I haven't even looked at the calendar, to be honest with you, so I don't know what's coming. Let me have a quick flick because I know we've got some data out. We've got jobless claims today, Eurozone consumer confidence flash coming in as usual with a negative number, no doubt. We get some more minor US manufacturing numbers, the KC Fed manufacturing index later on today as well. All this stuff is probably going to take a backseat to what's going on. As I mentioned, watch what happens into the US session today. It's going to be important how they react over there to this news, to the Fed, to the Bank of Japan. The floodgates are now open on Fed speakers, so we're going to get them coming out of every bit of woodwork, giving us their 10 cents on what they see at the FOMC meeting that's just passed. I don't know if you guys and girls have got anything you want to ask in the comments here, anything you want to look at in particular before we hook off. As mentioned, do be careful when trading the yen at the moment. It's still volatile. I've been watching it now. It jumped up to 143.30s, now back at 142.90s. You know, there's going to be a little bit of volatility here for a long while yet, so stay safe with that.
Ryan.
Yeah.
Yeah. Did you mention the SARB, the South Africa?
Are they today as well? Oh yeah, we got them as well.
Yeah, they are today as well. So they're expected to raise 0.75% to 6.25 from 6.5. I forgot to look at the dollar rand, but just know it's trading 17.64. Just know that 17.50s is an important level, guys. And I don't know whether there's a press conference, but if there is, don't miss it. It's the funniest central banker of all. The guy is really a showman, and it's one that not to be missed. If I find the link to a live press conference, that's going to be my moment of joy for the day.
Yeah, and just in case you're wondering, there's no press conference at the Bank of England today. It's just the announcement and release of the minutes and statement. They only do press conferences when every quarter when they release their monetary policy report, and that's next in November. So no press conference for this one. Brian, I'm going to have a word with you in the room, asking me what's happened to the yen. Go look through the room, sir. Look at the news, look at the events. You'll find out exactly what's gone on in the room there. And as ever, if you guys and girls want to join our chat room, please feel free to do so. I will knock up the link for you in a moment. Yeah, it's been very busy in there. Lots of people obviously trading away. It's where we can bandy ideas around. A lot of the stuff that you can read on our Twitter, ForexAnalytix Twitter, ForexFo Live Twitter, on our news streams, a lot of it goes in there first. So if you want to be first to the headlines that are coming out, you know, we were some of the fastest dropping all the comments from the central bankers this morning. So if you want to come and join us there, please do so. Prices will be going up. Follow that link. You can get a discount of 20% off the current prices for the lifetime of your subscription, however long you subscribe for. So get in quick before those prices go up. Brian, I don't care if you woke up late. Do your homework, mate. You always got to do that. Always got to do that. Get in there. Nice one, Stephen. Use the coupon code. I'm glad you're in okay. Take advantage of that one. Right then. Back to the trading screen, guys. Good luck to you all. Please stay safe. No horror stories. And we shall see you all bright and breezy tomorrow. Have a good one. Cheers, Kay.
Cheers, mate. Have a good trading day, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.